Could we talk about software, which is trying to make a bit of a turn today? Some, looking at the price action in some of those names and saying, well, maybe we're trying to put a bottom in. If you look at Salesforce was down, let's look at Salesforce, because that stock, last I looked, had turned positive. And it still is up. The guide wasn't great from a revenue standpoint. They announced the $50 billion buyback, though. Sort of Benioff, stand up and saying, all right, this is getting a little absurd. And he was animated when he was on with Jim Cramer last night, talking about how the markets punish these names unfairly in his mind. Listen.
We are projecting $46.2 billion in revenue. Jim, the first time I was on your show, I think it was $1 billion in revenue. We're talking $46.2 billion. It's just the 46 times since 2008 when I was first. 2009, I think I was first on the
2008.
show. Amazing.
Well,
and Jim.
Yes.
Jim, that, of course, was one of our first SaaSpocalypses. Remember that? You said I had to come on the show because it was a SaaSpocalypse, and then we lived through the 2020 SaaSpocalypse when you're like, oh, how are you going to survive through the pandemic? And here we are, Jim. We're in another SaaSpocalypse. It's a series of SaaSpocalypses.
All right, that's Mark Benioff with Cramer. Maybe this time is different than some of the others. Not sure. Dan Ives says solid quarter. He lowers his target, though, to 325 from 375 to reflect the lower multiple. You have at least 5 target cuts today. The lowest I saw was to 194, reiterated underperform at Bernstein. Rob, you own this name.
On this name, I own some other names, and I think we're likely to be longer at some point, but we're not ready to call a bottom. The reaction today demonstrates how oversold these names have become and how extended the positioning between semi and software have become. And most companies have been absolutely guilty until proven innocent in this space. And there's valid questions on terminal growth rates. There's no question about it. But I think we're in a place where these service businesses, Scott, are ultimately possible beneficiaries of the things that are happening here. Maybe it's not. They want you to believe that. Well, and we do. We've seen these dark periods before, and they become essential adoptions into many of the way businesses operate, and they can develop AI agents that ultimately are useful to their technologies and their service into businesses.
I think a memo went out this week or over the weekend, and I think in the memo, this is like metaphorical, not actually. Nobody wrote this in print, but I think a conversation behind the scenes was had. It's enough already, Dario. No more podcasts. The guy from Microsoft, nobody wants to hear from you anymore either. It's enough of this kind of talk. And now we want supportive talk from the AI layer of tech, or you're going to have some very angry customers, all of which are in the software business.
But how are you so you don't even, your actions speak louder than words. They don't have to say anything. They continue to roll out new products and innovations that are.
Disagree.
Look at Perplexity and what they've done in the last 24 hours.
Let me finish the thought. I think you'll agree with what I'm about to say. Here's what we've seen since this hypothetical conversation happened behind the scenes. We saw in my industry, LPL announce a massive thing with Kevin Nolan, who runs the wealth management vertical at Anthropic. This was not about, look how many financial advisors we're going to replace. It's, hey, here's LPL, almost as big as Morgan Stanley in terms of advisor headcount. We're doing a collaborative deal where Anthropic is going to power the human, I don't know what they call them in Silicon Valley these days, meat computers, who actually are serving clients on the front line. And that was not a disruptive announcement from Anthropic. It was a collaborative one. Then you hear Jensen Huang come out and say, if you have a robot in your kitchen, are you trying to invent a new Cuisinart? Or does the robot learn to use that Cuisinart? The Cuisinart is a great stand-in for Salesforce, for ServiceNow, for Workday, for all of these tools. It's more likely the agents are going to learn to use the SaaS company's products rather than how quickly can we destroy them and build new ones.
That's probably why when Jensen Huang was asked about what's been happening in software, when he was on Squawk Box, he said the following.
I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms. You know, these agents, of course, they have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses the tools that they have.
Okay, so there's Jensen defending, in some ways, the software business. Snowflake also reported their revenue guide was good. The stock's not reacting very well either, Steph. What's happening here? You have at least 7 target cuts. Top pick at B of A, 275. Target to 195 at Bernstein. Their market perform. So what's with this one?
Well, last year it really had a very nice year, and the year before that it had a really bad year. It's a pretty volatile stock, but I think the numbers are very supportive of the stock going higher over time. Product revenue growth of 30%. Who do we know that's actually growing product revenue at 30%? RPOs are running up 42%. Huge. Deferred revenues, 31%. Their net retention is 125%. I mean, their customers love their products. They've got more products coming out. The guidance was fine. I think a little conservative, but we're learning that this management team actually is a lot more conservative than previous management. I think margins eventually can get to 15, operating margins can eventually get to 15%. I mean, they just did 9. So I think that there's a lot of operating leverage in this one, and I think it's just, it's getting caught up with the rest of software. I think that's the opportunity, though. These guys have a consistent way of growing 25 to 30% in product revenue growth, and I think that's going to continue for quite some time.
So you bought more Synopsys. It's the one that you were alluding to earlier when you said you trimmed Amazon, and then you bought more of something, and this is the something.
This is the something. It was an outstanding quarter, and this was a very conservative guide, and that's the reason why the stock is down 5%. But this thing is down 35% from its highs. Earnings grew 24%, revenues up 66%. Design automation grew 96%. This is mission critical stuff that is sold, software that's sold to the semiconductor companies, the sophisticated semiconductor companies. The more sophisticated AI gets, the more they need Synopsys and Cadence, by the way, and it trades at a 6 multiple point discount to Cadence. And they just made a huge acquisition with Ansys, and I think that it's going to grow, enable the company to grow its total addressable market from $31 billion today to $58 billion by 2028. So I just don't see why this stock is down as much as it is, especially today after a good number, but a conservative guide is conservative guide.
So in terms of stocks that we think, or you guys ostensibly think, are down too much, ServiceTitan, let's look at that one, because the stock was down 34% year to date. It is not down 34% today, and it's probably not down 34% year to date anymore, because stock's up near 7%. What's the deal with this surge today of your name?
So I added to this one, and I added to Toast during the unpleasantness last week, not this week. And I think the obvious thing to say here, in the case of ServiceTitan, the company's only been in business for been public for a year and a month or something like that. They just don't have the institutional sponsorship. So when people started selling software names, this is in all those baskets. The bottom fell out. People don't even know the story. That's why it got to as low as it got. It's the dumbest thing in the world if you think carpenters and plumbers and electricians are running out to code their own customer billing software. That's obviously never going to happen in a million years. So this, to me, is a screaming buy. That's why I added to it. And I'm not saying it goes right back to 100. I just can't understand the rational person that would think that this thing is under threat from AI.
Okay. So Zoom's another one that was on the watch list today for sure. The stock's down a lot. Josh had sold it recently. Now we learned from our own Joe Terranova, he owned it personally. He sold it today, and you'll hear from him the next time he's on regarding it directly. But stock's down 13%. Joe's like, I'm out of here. And then lastly, before we get to a break, you bought, and you've been making the point, hey, I'm buying the SaaS apocalypse. And you bought more, I think it was ServiceNow a week ago, and now you bought more IBM today.
IBM, so as you and Josh were having the conversation a little bit ago, Claude Code announcements have caused these opportunities for investors who are willing to look past the red on the screen and actually take action. IBM is one of those to me. A piece of Claude Code announced that it could actually replace the old 60s coding that powers ATMs that IBM's specialty is, and the stock goes down 12% in a day. I loved it at 300. I really love it now in the 240s. It was silly to me, and so I stepped in and added to that position. It's a position that I own really based on their developments in AI and their ability to create a business line out of nowhere. They've 4x'd their AI book of business basically in the last year and change. That's what I'm invested in, not their ability to create old code models and keep them going one more decade.
All right. You can't talk about software these days, it seems, without talking about what's happening in private credit. They are now linked.